Okay, let's do a follow-up video here, guys. So this morning, if you want to play the first video, was how to spot daily breaking points in the markets. We did a video this morning, right around 8:30 this morning at this level. So the market was right here when we did the first video. So I'm going to put that little circle up so you know these are leading indicators. This is not after the fact. So we did our first video right here at this circle at around 8:30 this morning, and we talked about the line in the sand and how you can find breaking points in the market. So play that video. It shows where you can look to find shorting opportunities and where to find buying opportunities in the market using our liquidity grab technique and then also our zone. So let's take a look at the line in the sand specifically this morning. And this is a setup that we were talking about this morning in the previous video at 8:30. So price is right here at the time of the first video. We're coming down into the buy zone. So this is the buy zone. All right. So our zone, you can tell I moved it from, let me move this down. So you can see this is the buy zone. Here's our buy zone. You can extend it out. And the buy zone at this lower level right here creates what's called the line in the sand. So the bottom of that zone is the breaking point or the reversal point in the market. So what we want to see is, let's get that going forward. It came down to it and stopped right exactly to the tick of our zone. That's how important these zones are. Came down to it, price comes down. We talked about it here before it happened. If it would have broke the line in the sand, then we're going to look for a sell-off. But we got a reversal candle. We got the reversal candle that came in. Now you can use a smaller reversal candle if you want. We use to show in the room, we use a 35 tick reversal on the Uni Rinko bar. But you don't have to use that. You can use a smaller reversal candle. I like the larger reversal candles to give confirmation of a possible move. But if you want to do a 20 tick, 25, 30 tick reversal, you're more than welcome to do that in these zones because these zones are static. They do not repaint. They do not change. So we come down to it, stops right to the tick, showing bullish possible move. We get the reversal, 75.5 pull in. Got as high as 88, a 13-point move that we talked about this morning before it came up. Stop right at the line in the sand. Our zone trend was green. Nice opportunity, got long. Then it comes up. It gave another ABC long inside the zone. Not much on that. If you want a second shot at 85.5 to 88.5, 3 S&P points potential. But then it got right into the buy zone again. Here's a line in the sand. If it breaks that, the market's in trouble. Does not. Comes right down into our buy zone. Right down into our buy zone. Stays right inside of it. That's what we want. Then we get the big reversal candle. And now we got another nice trade. 80.5. High as 95. 15 S&P point potential to the upside again. It's all about patience and discipline, waiting for these markets to come into these zones. These zones are very critical levels. You can see the last few days, they have been calling these big inflection points for reversal. There's a big reversal inside of the zone, big reversal inside the zone, nice reversal inside the zone, nice reversal inside the zone. And then when it doesn't reverse and you don't get pulled in a reversal candle, and breaks outside of the liquidity grab zone, well, that tells you, the market's telling you. You're not guessing at things. You're not trying to flip a coin whether it's going possible north or south. You got the high probability on your side because it broke out of the zone. These zones reverse prices. So when they finally break to the other side, you're looking for a critical possible push to that direction, which we saw yesterday. All right, so this is a good follow-up video for you. You can see these are not lagging indicators. These are very leading. And it works on all markets like this. So right now we know where the line in the sand is the next one. It moved up. So our line in the sand will be here. And this will be your next test if this market wants to continue higher. So there's our next testing point. Line in the sand is on the right margin at 67.7650. So that will be the next test to see if this market's going to reverse.